Let's find some option swing trades. Hello, everybody. It is Wednesday evening, May 13, and it's time for the weekly swing trading video. We've had a little bit of excitement in the market this week. You can see how the major moving averages are coming into play right around that 300 level on SPY. 100 day has crossed over the 200 day. It's continuing to come in. Now you can see here that we've got a double top formation. This is slightly lower than that high, not by much. But you can see that yesterday we tried to get through that high right on the opening, and we had a steady dose of selling the entire day. We closed on the low, and then we had follow through selling today. That's exactly the type of pattern that I'm looking for. Earlier, I had mentioned to you that I had an upward sloping trend line that went right through this point right here. So today we closed below it. We're below that critical support level at SPY 288. So what's changed? We're starting to get some information that the coronavirus is a lot more resilient than expected. There have been outbreaks in Wuhan, China, outbreaks in South Korea due to the reopening of nightclubs. We've had 1,500 deaths per day still in the United States. So this virus is really, really stubborn. And governments are reluctant to reopen. They are trying to reopen, but this phased reopening is going to be extended for a very long period of time because they do not want to have a resurgence in the virus. So, what that means is that small businesses are really going to be hurting. This fiscal stimulus plan that's been uh, put out to all the small businesses to the tune of $6 trillion. We've got money going out to businesses, money going out to workers. We have the Fed purchasing corporate bond ETFs. They're doing everything they can, but this money is going to run out very, very quickly. And I believe that as workers get back on the job, they're going to be looking over their shoulder. They're going to be wondering if their jobs are secure. If they don't see the orders, if they don't see the foot traffic coming in, they're going to assume that as soon as the stimulus money runs out, that they're going to get laid off. Now, what that's going to do is it's going to severely crimp consumption. Spending is going to be very, very contracted. And we're seeing that in China. China is the litmus test for everyone because they've already been reopened for over a month now. And the reports coming back from companies like McDonald's, they're saying that consumers are very, very leery of going back and resuming their previous lifestyles. Yes, things are gradually improving, but at a very slow pace. This is not, gee, let's slam on the brakes, let's take a couple of weeks off, and then let's get right back at it. That's not happening. So this could drag on potentially for another 2 or 3 months while this phased reopening starts to take hold. So we've got this double top formation right now in the market. I can't say that I'm going to get overly aggressive on the bearish trades right now. I've got a couple of nice bearish trades that we'll be doing this week. I've also got some bullish put spreads that I want to sell. I see the market as really trying to weigh these conditions out. We've got a low established right here that's right around the 270 level. We've got a high at 294. I can see the market spending some time there. We've got probably another 3, 4, 5 weeks while the economies start to reopen to really see how all of this plays out. Asset managers are erring on the side of being long. Well, why are they doing that? They're doing that because zero interest rates are really preventing other investment alternatives. So right now, the market's the best place to be. They know that if they're in fixed income, interest rates don't even keep pace with inflation. So they're generating negative real returns if they're in fixed income. They also know that every central bank in the world is printing money like mad. So there's a safety net under the market. They might as well stay in stocks right here and see how everything plays out because they don't really have anything better to do with their money right now. I'm going to take a look at VXX. I'm going to tell you the difference between now and a few months ago. You can see how that's where the VXX was. You see this massive spike, and you can see how it's gradually been coming in, downward sloping channel right in here, but it's still relatively elevated. You can see the little spike right in here. Why do I care? Because asset managers were already thrown a curveball back in February and March. They're not going to make the same mistake twice. They're hedged. They've adjusted their risk exposure. So now They're not going to be caught off guard, and that means that we're not going to see a massive market decline like we saw earlier, unless this recovery goes very, very slowly, and unless the coronavirus really starts to increase again and they start to see credit issues. Credit concerns are the one thing that could put us into a long-term sustained market decline. Central banks are doing everything they can to prevent that right now. So asset managers are going to stay engaged and they're going to stay in the market. So as much as I'd like to say, I think that this is going to take a lot longer than expected, and I think we're going to have a really nice market pullback, we need to have a fairly balanced approach. And as the market does come in, and if it comes in hard, then we'll have a really good opportunity, I feel, later this fall to maybe even buy some options, buy some call debit spreads, and ride a nice wave into year end. But right now, I still feel we need to be cautious. I've had a very difficult time making money on the short side. It seems that stocks have been really, really strong and that we're getting really nice upward directional movement on the long side. And on the downside, most of these stocks haven't been able to get off the deck and they're really compressed down at the lower end of their range. So really, really hard to short and make a lot of money on those unless the overall market rolls over and starts to sell off hard. I don't see that happening just yet. We need more clarity. We need more proof. So let's take a look at some individual plays, and I want to start off with our trades from last week. And we were able to get in on 2 of the trades, and we've got a few trades that we need to review. So what I'm going to do is I'm going to pop up this table right here, and this was the staged order screen previous to tonight. Now we've cleaned it up an awful lot. We don't have a lot of open positions. So the stocks that I'm taking off, Walmart's going to expire. We sold that 100 put for $2.20. You should have bought that back for pennies. That was a really nice winner for us. The Gilead, we sold the May 65 put for $1.30. You should have closed that out. Actually, it expired last week, so that should have been closed out. The MU 3750 put for 75 cents. That expires Friday. It's way out of the money. You can buy that back for pennies. We got to do some housekeeping. We got to get rid of some of these positions. AMAT, the 3750 put. I can't quite recall if we got this spread done for 50 cents or not. If we did, it's a winner. If not, that should have been marked in yellow because the ones that are marked in yellow mean that we weren't able to get in on the trade. ROST, we sold the 85 calls and bought the $90 calls, and we did that for a credit of about $2.25. I was able to get in a little bit better, I think 235. This stock went against us almost immediately. I did not expect that kind of strength from the stock. Didn't expect it from the retail sector. Quite honestly, didn't expect it from the market. But everything went our way in the last 2 days, and I sent out a special email alert and I said, buy that spread back for $2. And that order will be good until the video Wednesday night. Well, we'll take a look at it. Actually, we don't have to take a look at it. Those options, I believe, were offered at 95 cents, and that was on the $85 call. So you should have been able to buy the spread back for much better than $2 if you held off. Stock's actually out of the money. Could be a really big winner for us. But I've learned over the years that if I'm in a bad trade and it ever gives me a chance to get out at a scratch or even make money, do it. Just do it. So I didn't hesitate once I saw the stock coming in. Was a little bit surprised that with the news from companies like Neiman Marcus, J.C. Penney, J. Crew, all these retailers are going under, that ROST was able to hold up as well as it did. But in any case, ROST bought it back, small winner, but it was a winner. Starbucks last week, we tried to get in on that trade. We were unable to, and I had mentioned to you that this is a very short-term trade, and if we couldn't get filled by last Friday, you should cancel it. Same thing on Google. We were never able to get in on that trade, but we were able to get in on a couple of others, and I'll show you those in a second. Here's a Netflix 280, 250, 280 put spread that I highlighted in a separate video. That was a winner. That should be taken off of our screen. That expired last week. We had Facebook put spread that we sold for a 35-cent credit after earnings. That expired last Friday, so that was a winner. That can come off. So we also had this CLX spread that we tried to get on last week. We're unable to get in that. So what that leaves us with is a handful of positions, a couple of which will run their course in the next few days. FLS, the May 15 $20 put, we sold those for 50 cents. And I'm going to move this off screen very quickly so we can take a look at that. The stock is currently $2 out of the money. We've got about 2 days left till expiration. You can see it's at $22.19. This should expire worthless. If you can buy it back for a couple of pennies, buy it back, but you only have to watch it for 2 more days. I don't think the stock is going to drop $2 in that time period, so I expect next week this is going to be a winner that I'm going to be showing you. I really like that stock, by the way. I hope it comes in hard because I will gladly sell some more put premium on that. VLO is another one that we sold some puts on. We sold the May 15 $60 puts and we got $1.20 for those. So let's do a recap on that one. VLO, I'm going to take a look at that. And you can see how the stock gapped higher after earnings. It's been compressing. It's had a little bit of weakness due to the market right now. So this $60 support level is starting to be tested again. Stock closed at $59 today. It's a mover. So what I'd like to do, we've only got 2 days left. And what we're going to be doing is we're going to be buying that put back for $1.20. Let's move on. We don't need to take assignment on the stock if we can buy it for $1.20 between now and expiration on Friday at 3 o'clock Central Time. But if we do get assigned on the stock, I'm okay with that too. So I'm going to be watching to see if these options trade Thursday or Friday at $1.20 or less. If they do, I'm going to assume that everybody had their order working before the open on Thursday and that we were able to buy those puts back. If they never get as cheap as $1.20, then I'm going to assume that we are assigned on that stock. Now, those options closed today. We're going to take a quick look at those. Those are the $60 puts. I think they were like $1.50 off or something like that. So it won't take much for these puts to come in. They're $1.62 bid offered at $1.80. That stock rallies 50 or 60 cents. We'll be able to buy those options back. So let's go to the two other trades that we have open. Hasbro, we have the June 19 $60 put and we have the June 19 $50 put. So we bought the 60s, sold the 55s. Now, last week we were able to do that. The market ran higher right out of the gate Thursday morning. I was able to get in on this, I believe, for 95 cents. If you did the trade right away, I believe our entry price was $1.10 max. We're going to be trying to sell these for $1.60. That should give us a 50-cent gain on that trade. So have your orders working. Sell those for $1.60. You can see that it's already in the staged orders. Sell the June 60 put, buy the 55s, do it for a $1.60 credit. McDonald's, we were able to get that trade off as well. Stock's really performing well. Same thing here. I waited just a little bit after the open because the market had gapped higher. I was able to buy this spread for less than $1 as well. We're going to try and sell this one for $1.60 as well. So we are long the June 165 puts and we're short the June 160 puts. So we're going to try and sell that for $1.60. That'll give us a 50% profit. For some of you, it might even be more than 50%. So let's take a look at those two picks before we move on, and then we'll be able to take a look at this week's picks. So I've got MCD. You can see how the stock has this nice downward sloping channel. Right now, it's testing this horizontal support level, and today it broke below it. It's also below the 50-day moving average, so that's a good sign. It's got very nice relative weakness. All we need is for the stock to come back maybe down to the 168 level or so, and then that 165 put should start really cranking up, and we should be able to get filled on that. So if we get about another $3 pullback in that stock, we should be in really great shape with lots of time left till expiration. Hasbro also coming in very, very nicely. Look at that relative weakness. Stock broke below this horizontal support level right here. It's starting to crank up. So it's starting to really drift lower pretty hard. You can see here that the stock is at 62.84. If it gets down to, gosh, under $61, I think we've got a very good chance of getting filled on that spread also. Nice return too, 50% winner. So as I go back to this page right here, the one point that I want to make to you is I thought ROST was going to be our first loser that we have in a very long time. I can't even remember the last loser that we've had, and I'm going back into probably early February. We've had so many dang nice trades, so many winners. During that market decline, we were selling out of the money naked puts. All of those expired worthless. We never even had to sweat it. We're selling out of the money bullish put spreads like mad. Fantastic shape. So now we're almost back in cash. And we've been able to time this perfectly. I'm really happy with our positions. I like having these two cheap little debit spreads on right here. They should generate a nice return for us. And I'm going to have 4 more picks today. Maybe we don't get filled on all 4. Maybe we do. In either case, it's good. We'll see what happens. I like all the stocks that are highlighted this week. So first, I'm going to just go through the picks, and we're going to take a look at them, and then I'm going to show you how I found them. So I'm going to load up the staged order entry screen right here, and I've got them loaded for you. And this is what the new order entry screen looks like. You can see everything's been pulled out of here. So we've got the McDonald's spread, the Hasbro spread. I've got my order in here for VLO to try and buy that back for $1.20. You can see the FLS trade that we've got out there right now. And so these are the 4 new trades that we're going to be taking a look at. I've got 2 bullish trades and 2 bearish trades. So I'm going to put this off screen very quickly, and then we're going to take a look at each one of these. And let's go to the first one, LVGO. Really, really like that. You can see how that stock is broken out. It's a healthcare company. If I go into the stock ER, this is a nice feature that all of you can take advantage of. You can see I can click on view press release. This will give me the last earnings report. You can see that for the quarter, revenues were up big. They were up 115% year over year. That's why the market really likes this. I don't see this company being in any kind of jeopardy with a resurgence in coronavirus. They're in a sweet spot right now. They're making great money. So we are going to try and sell an out of the money bullish put spread on this. I love this gap right here above the prior high, and you can see how that support level is held. Now we're going to be leveraging the tail of this candle right here. And the assumption for this trade is that the stock will not fall below $50. Even if the market comes in, that support level will hold. And there you can see that's almost the tail that we had from the high just before earnings. I don't believe it's going to be able to pull all the way back. It's had great relative strength during the last 2 days of market selling. So really good volume in here as well. So let's bring this back in and take a look at the trade that we're going to be putting on. And here you can see we're going to be selling an LVGO June 19th. They only have regular options, no weeklies. We're going to be selling the 50 put, and we're going to be buying the 45 put. And we're going to be trying to get $1.15 credit for that. So let's load up that trade, see what it looks like. I'm going to put in LVGO. And we're going to go to the June expiration. The other nice thing that we need to keep in mind right now as far as selling premium is that we've got a holiday coming up next week. So that is going to help us from a time decay standpoint. When you take Memorial Monday out of the picture, you usually take Friday with it, you take Tuesday with it. So a holiday is like taking an additional 3 days out of the market. So we're going to go down to the June 19th, $50 strike price here. And you can see that that is the red dotted line. So that is 1 standard deviation out of the money, which is nice. And you can see that that is, well, it's not really, it's 90-cent bid offered at $1.95. Okay, so 90-cent bid offered at $1.95. We'd typically like to get $1 for this spread, but I think we can do a little bit better than that. I think we can get $1.15 for this because it's already a 90-cent bid off screen. And you can see the offers at $1.95. At $1.15, we're still bid side. So I think that we'll be able to get this one done. That's the trade. And we're going to keep trying to do this until the video next Wednesday. If something changes dramatically and I see the market falling apart, I will send you an email. It'll have a link in it with new instructions. I'll also post those instructions right in the bulletins here in Option Stalker so you can't miss it. So please just make sure to log into Option Stalker. You'll see the bulletin, watch your emails, and you'll know when we're going to be adjusting anything if needed. But because this is a June option, I want to give us plenty of time to try and get this trade done between now and next Wednesday. So again, we're selling the June $50 put and we're buying the June $45 put, and we're doing this for $1.15 credit, LVGO. So let's go to the next stock, RNG. You can see it right up here. And I'm going to show you that trade. We're selling the May 29th. So 2 weeks from now, 2 weeks and 2 days. So this is going to be fairly short term. We're going to be selling the 255 put. We're going to be buying the 250 put. And we're going to be doing that for a 50-cent credit. So let's take a look at that stock right now, RNG. And let's go out to that May 29th expiration date. And let's go down to that strike price. So we're selling the 250s, buying the 250s. Just want to make sure that I'm right on that. Yes, selling the 255 puts, buying the 250 puts. This is a bullish put spread. And there you can see that spread. It's not a $1.20 bid because it's actually negative number here because the option bid-ask spreads are so wide. And so this is something that I've been telling you week in and week out. Well, what do you do, Pete? How do we know what the price of that is? We don't. All we know is what we want to make on this trade and what we feel a fair risk-return ratio is. And so in this particular case, if I look at RNG, we'll bring that chart up. Why do I like this so much? Well, you can see earnings right here after the close. The stock after that earnings announcement rallies and closes above prior resistance. That is a horizontal breakout. I love it. Look at this strength. Even when the market was selling off, let's put up that SPY overlay. Market down, 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 stock up, up, up. I love it. This stock, it wants to run. If the market pulls back hard, this company is not going to suffer because of coronavirus. People are buying their products. They've got really good sales growth. In fact, let's take a quick look at it. So if you want to check that, you can go into Stock ER. And again, we're going to click on View Press Release. Total revenue up 33%. You can see the last earnings report if you come in here and check this. So lots of really, really good momentum on the stock. Yes, it's at a fairly rich forward PE, but they're knocking the cover off the ball during a very tough period with coronavirus and all, and they're still doing well. So the market likes this stock. I like this stock. So my assumption is that this 255 strike price is going to be maintained because that was the prior high there, prior high there. Also got resistance right there. All of this now becomes support. And you can see 255 is actually halfway through this green candle right here. So I believe that 255 is going to hold, and this is only a 2-week trade. So let's recap it. 2 weeks and 2 days. So we're going to sell the 255 puts, buy the 250 puts, and we're going to be doing this for a 50-cent credit. SHAK. Let's take a look at that one. So here you've got a stock. They announced earnings. You could see They announced after the close. The initial reaction was very good. The stock opened on its high of the day. It could not challenge that 100-day moving average. The entire day, the stock backed off. Lots of selling pressure. They made another attempt to try and get through that 100-day moving average. Now, this is before the market sell off. Couldn't do it. Made a lower high. So now we've got a downward sloping trend line. And the day 2 days ago, again, slapped down below that 100-day moving average. Now we've got some bona fide selling pressure. Shake Shack is a restaurant. I believe that the reopening, you know this from my comments earlier, I think this reopening is going to go very, very slowly. The friends I talk to, the neighbors I talk to, colleagues I talk to are all, and this is unsolicited, they all tell me they're pretty nervous about what's going on. And they see this taking a lot longer for us to recover. And they just are not in the mood to go out to a restaurant or to go out to a bar, even if they did open. And who wants to sit around with a face mask on? And it's just a very uncomfortable situation. And I know that from a restaurant standpoint, restaurants are built for peak capacity. When you fill your restaurant during lunch and dinner, you want every seat filled. And when you do those kind of numbers, then you have the scales, the economies of scale to actually make money in a very competitive, low margin business. If you're trying to fill or make money with 30% of your restaurant filled, it doesn't work. The math doesn't work. You're going to see a lot of restaurants who choose not to reopen until the economy is humming, until we're through all of the different phases for reopening. So I like this on the short side. The company said that they're having to really scale back their expansion right now because of their soft sales. So I want to lean on that 100-day moving average, that $55 strike price. So let's take a look at that trade. Going to go into staged orders. Here we're trying to sell one of the SHAK June 19 $55 calls, and we're trying to buy the 57.50 calls, and we're trying to do that for a 50-cent credit. Again, you know my target is 25% on all these spreads. So when I just mentioned to you all the different trades that we've had in the last few months, each one of these has yielded about 25%. Yes, ROST did not yield that type of return for us, but that was one of very, very many. So let's take a look at that trade. SHAK is the symbol. We did also have a lot of naked puts that yielded somewhere in the probably 12 to 15% return. Still very, very nice, especially given the market conditions. So we're in the June 19th expiration. And we want to go to the $55 and the 57.50. And you can see that that is currently 25-cent bid offered at 60 cents. We want 50 cents. So this stock is going to have to bounce a little bit for us to have a chance to get filled, but we're going to keep trying because we've got a month and 2 days before this expires. So I want to keep trying to get this spread done between now and next Wednesday. If something changes, I'll let you know, and then we can cancel the order if we're not filled. And I am placing these trades. I'm doing one contract for all of them so that I can gauge if we're getting filled or not. I don't want to be competing with all your orders. A one lot's not going to make a big difference, but that way I'm at least able to get a sense for whether or not we're able to fill on it. So that's the trade. Again, we're selling the $55 call. We're buying the 57.50 call. We're doing that for a 50-cent credit. That's the June 19th regular expiration date. You'll also notice that we're having to go a little bit further out in time. Well, that's because the option premiums are starting to come in, just like I've shown you in the VXX. So as that happens, we're going to be able to shift eventually into more premium buying strategies, but we have to have market direction before we do that. So let's take a look at the last one, WYNN. Macau revenues were down 93% in April, just horrible. they're also struggling to recover right now. China's way ahead of the game in terms of the recovery, but they just had more outbreaks in Wuhan. So chances are we're not getting the full story out of them. I think that there's probably greater concern than you might expect. But the casinos in Macau had actually been opened in March, and April's revenues were still down that much. Now, most of it was travel related because the travel was shut down. People couldn't even get to the casinos. But I suspect that they're pretty leery of going back and spending money when they don't know how things are going to pan out economically. They're waiting to see if the orders are coming in from the rest of the world and if consumers are going to be buying. And I'll tell you right now that they're not buying because everybody else is still in lockdown, still in shutdown. Last month, China's imports declined by 14%. Now, that was expected, so they're not importing a lot because they're not seeing the demand that they need to manufacture. So, all of this comes into play, and I feel that they're going through the same thing. They're going to be watching, trying to determine whether or not their jobs are secure before they go gambling in the casinos. So you can see how this stock made a double top. You've got the high there, a lower high here. It's been coming in even before the market decline. You can see earnings after the close right there. They tried to rally it a little bit, nothing going. You can see how the stock is pulling back and it's about to drop below this horizontal support line right here. That was the prior resistance. Now that becomes support, and we're testing that support right now with a good chance of falling below it. So, as you probably guessed, we're going to be trying to sell a bearish call spread using that $90 strike price. So, let's bring up the option chain and let's put that staged order up here, see what we're doing here. We're going to be selling one of the win, May 29. We're going to go closer to the money on this one. We're going to be selling an $85 call, and we're going to be buying an $86 call, and we're going to be doing that for a 20-cent credit. Now, the reason that I wanted to go very short term on this is because the Macau gaming revenues will be out June 1 or June 2. So I want to avoid that if at all possible. I don't want to be subjected to a possible spike up if their revenues are a little bit better than expected. And so let's take a look at the option chain here. We'll put up win. And we're going to go into the May 29th expiration. And we're going to click on the 85s and the 86s. And so here you can see we're going to be selling the May 29 $85 call, and we're going to be buying the May $86 call. There's $1 spread between the strike prices, so we're going to be doing this for a 20-cent credit. Now this one, we're going to try and continue to do this until next Wednesday also, although truth be known, I'd like to get in on this trade by Friday or we're going to cancel it. So you can see that the stock's not going to have to move very far for us to get there. So actually, I'm going to make that a firm only try and do this Thursday or Friday. If we can't get in the trade Thursday or Friday, we're going to cancel it. The other three trades, we're going to keep trying until next Wednesday's video. And then I'll give you an update on those positions. If anything changes, I'll let you know via email or I will post a bulletin. So those are our trades for this week. So let's take a look at how I found them. And there are a number of different ways that you can go about finding these stocks. I wanted to stay fairly balanced. I'd mentioned why earlier. We've got two bullish positions, neutral to slightly bullish. We've got two neutral to slightly bearish positions. So we're pretty well balanced as far as market risk exposure. We're taking advantage of relative strength and relative weakness. And you can see that the market, go into the SPY, is still in this trading range right in here. So we haven't had any massive big breakdowns. Yes, these are two nice solid bars connected one to the other. I don't know that the bottom of the market's going to fall out here. So I think that we've got to play this in a fairly neutral way. We still need a few weeks of clarity before I think you would see any kind of big selling because it's all dependent on the consumers. I'm going to bring up the custom search and we're going to do what we normally do, which is to mark option liquidity, and we're going to use an option liquidity rating of 3. And then I'm going to go in. I want to take a look at companies that have reported earnings. So I'm going to click earnings date previous. And the reason that I'm doing this is I don't want to be muddling around with companies that announce earnings next week or the week after, because then I have to adjust my position. I want those earnings to already be behind us. So on the bullish side, I'm going to mark relative strength versus SPY. And I'm going to mark trade signal bullish also. I'm going to remove a couple of these. And there we can see some of our candidates coming in right here. And you can see LVGO. That's how I found that stock. So this is a fairly easy search. I did take a look at some of these others, and I didn't feel that the option liquidity was that great. In the case of ABBV and BMY, I also didn't feel that the price action was quite there. I wanted some really good news, and I wanted some strong momentum. ABBV has had this nice breakout in here. I had contemplated selling a bullish put spread below that 100-day moving average right there, and I still think that would probably work. BMY is one that really compresses. I like the fact that it's been able to hug this 100-day moving average. So yes, you could probably sell a BMY spread below that $60 strike price, but you can see the stock doesn't move a lot. So you got to stay very, very close to the action to be able to get that done. And now I'm trying to think of how I found Ring, because it was a really strong one, and I think it might have had strong after earnings, might have been the search that I used there. So go into scanner, and I'm going to take a look at strong after earnings. And let's just say if you scroll through this, I'm quite confident that's where I saw RNG was in that particular search. And it could have even been just taking these off and looking for a stock that had some decent ADX. So let's see if it comes up there. It didn't, but this is also a nice way to search for stocks that currently have, on a 2-hour basis, some nice upward momentum. And these are going to be excellent candidates for you. If you click through each one of these, you're going to see some really good looking charts. Put up some relative strength in here also on that same 2-hour basis. Yeah, you can only have one stock then. It's going to whittle it down pretty much. Cast a wide net and then keep adding criteria. Draw that net in closer and closer until you only have a handful of candidates that you're looking at. And the more boxes that you have marked off, the higher your degree of success. So let's go in and take a look. Use that same exercise. We're going to go in and take a look at the bearish side here. It's very easy to do. This is something that you can be doing to find your trades on a daily basis. And there you can see there are actually quite a few stocks that have a bearish trade signal and are weak relative to the SPY. Now, if you wanted to, you can also come in and you can mark off, let's say, less than the 100-day moving average. Now, if you do that, then you know that you're going to have a major moving average that you can lean on. So let's just pick one. Let's do maybe Cake. It's a restaurant stock. And there you can see these are all way below major moving averages. Maybe check another one. These are going to be fairly weak stocks. So I like to have a nice firm resistance level. It could be a major moving average. It could be horizontal resistance. But that's a great way to find stocks that have a lot of weakness. If you're looking to buy puts or you're looking to sell out of the money bearish call spreads, Really great approach to using it. You'll see MGM in here. Met looked really good. There's McDonald's right in there, Marriott. These are all nice looking shorts. So let me go through and take a look at a couple of those and I'll show you those. So this is Marriott. You can see that stock's rolling over down through horizontal support right there. McDonald's we're in. MGM really looks good. There's another hotel stock. I didn't want to load up on Wynn and MGM. They're both in the same space. 3M, MMM, it's been really weak. It's broken through this horizontal support. It's below the 50-day moving average. That's a stock I was shorting today. I think that makes a really nice day trading short. So there are lots of candidates and very, very easy to find on a swing basis. So if that's what you're using Option Stalker for, is to primarily do swing trades, after hour analysis, this is a great search to use. Make sure you got the option liquidity marked, earnings date previous. Just make sure you've got at least a couple weeks worth of earnings dates so that you've got plenty of candidates to look at. And then these are the boxes that I like marking on a 2-hour, 4-hour daily basis, weak relative to the market, and on a sell signal. And then you can keep adding filters to that. Now, Cisco did announce earnings after the close today, and I do kind of like Cisco. Had about a $1 move after the close, and I was looking at that horizontal support level right here at $41, but I don't really know how the stock is going to react tomorrow, so I couldn't add it. But if the option implied volatilities are pretty high, I could see selling a $41 put and buying a $40 put maybe a couple of weeks out. If I can get that 20-cent credit, I would certainly consider doing it. Stock reported pretty decent earnings today, so that's another one that you can consider. That's it for tonight. That concludes the presentation. If you're watching this on YouTube, you're seeing it 2 days after the fact. I release this to members on Wednesday nights. So what that allows you to do is to go back, take a look at my analysis, take a look at my picks, see how they fared over the course of the last couple of days, and then you'll get a feel for the quality of the research that I provide. If you like this content, please give it a thumbs up. Also, make sure to subscribe to the YouTube channel and turn on your notifications, because I do these videos all the time and I always include some actionable trades in them and lots of education. So please subscribe to the YouTube channel, turn on your notifications. I'll be doing a video tomorrow morning. I'll see you then. Thank you. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.